Welcome to the CiiTA Education Series, what every manufacturer needs to know about the 340B drug discount program.
Hello, I'm Jason Hardaway, Managing Partner of CiiTA LLC. Today we're going to talk about one of the most challenging aspects of the 340B drug discount program for the manufacturer, specifically the covered entities' use of 340B inventory and the revenues associated with their program.
The 340B program is complex and difficult to administer. Fortunately, many covered entities at least try to audit their own program and occasionally identify non-compliance, that is, drugs purchased at the 340B price for which the discount should not have applied. Unfortunately, the covered entity's typical action in these cases is to simply send the manufacturer a reimbursement check to correct the underpayment. In nearly all cases we've seen, these checks arrive without appropriate documentation or reporting. This causes significant headaches for the accounts receivable department and can have serious implications for the manufacturer's own 340B program compliance. Let's take a look at how this happens. Drugs that eventually become 340B inventory start their distribution journey just like any other. Product is shipped from the manufacturer to wholesale distributors. The inventory moves on to various customers, including 340B covered entities that purchase through a unique 340B account. That's where the visibility stops. The only way a manufacturer knows how much of their product has been classified as 340B inventory is when it shows up as a chargeback on a covered entity's 340B account. Ultimately, the qualification of 340B prescriptions is only as good as the system used by the covered entity. System quality varies widely and is prone to error. This, in turn, causes diversion of 340B drugs to ineligible patients. As mentioned earlier, many covered entities will conduct periodic self-audits and identify a subset of prescriptions that are out of compliance. That is, drug purchases erroneously charged to a 340B account, though not eligible for the 340B discount. If and when this accounting error is discovered, the typical covered entity response is to estimate the underpayment amount and send a reimbursement check to the affected manufacturer. Despite the good intentions, these 340B refund checks actually cause several problems. First, without information about when the non-compliant purchases occurred, the manufacturer cannot apply the funds to the appropriate time period. Also, there is no way to know if the funds represent a correction for purchases over a month, year, or multiple years. Since prices change frequently, this lack of specificity has real quarterly and annual accounting implications. Second, the checks frequently arrive with no indication as to which indices they apply to. Invariably, 340B purchases from a manufacturer span multiple product lines. These refund checks can have a material effect on the P&L of the affected product lines, but which ones? The third issue, and probably the most troubling, is the reason for the refund check in the first place. Without any accompanying explanation, the manufacturer has no insight as to why the diversion occurred and no reason to believe it won't happen again. Further, they have no way to verify if the amount is correct. Let's review the implications. Self-regulation can precipitate unhelpful actions by covered entities such as sending unexpected 340B diversion refunds to manufacturers without supporting documentation. In addition, these refund checks are often unaccompanied by a letter absolving the covered entity of any further responsibility, or worse yet, no letter at all. That's where CiiTA can help. As the recognized leader in 340B advisory services and market intelligence for pharmaceutical manufacturers, CiiTA believes our clients need three things to successfully navigate the 340B program: knowledge, action, and support. Our products help manufacturers comply with 340B program requirements and mitigate its financial impact. CiiTA services include internal training for contract and compliance personnel, compliance assessment of selected covered entities, compliance dispute resolution including 340B audits, as well as ADAP formulary tracking and state-by-state Medicaid 340B requirements. If this information has been useful, please let us know. We would love to hear from you. Contact us at www.ciitallc.com, or you can email CiiTA's managing partner directly at jhardaway@ciitallc.com. Thank you for listening.